Hello, everyone. Welcome as we're starting a new month in the month of April. So welcome to our weekly Facebook Lives. So since we're starting a new month and it's not just any month, it is the month of April, the tax month. I thought we should talk about the upcoming deadline. What do we need to do? And do we need to, like, what do we need to do before April 15th? All right, so let's dig in. We'll share a screen and we'll go from there. So this is my joke for today. Somebody wants to claim the IRS as their dependent since they give them too much money. All right, so what do you need to do before April 15th? First thing is to file your individual tax return. This is what everybody knows already. Form 1040 or extension. If you're unable to file on time, then you need to file an application for automatic extension, Form 4868. You need to submit it by April 15 to extend the deadline for 6 months till October 15. So you need to file an individual tax return, and if you're not ready, file an extension by the same deadline. And just important note to know that an extension to file does not extend the time to pay your taxes. So if you have a balance due on your tax return, you need to pay that by April 15. That's why even if you're filing an extension, it's always better to make it as close enough as to the final. So be prepared, give everything to your accountant as you can, so that you don't owe too much when the actual information comes in. All right. So if you wait till October 15, that means you may be subject to penalties and interest if you haven't paid enough by April 15. All right, so we'll start with the individual and then we'll go to the business. What else as far as individuals? What do we need to do? Your first quarter estimated tax payments. Wait, do we have to pay estimated taxes? Not everybody. Like if you're on a W-2, you don't have to, but it's due for self-employed individuals, for freelancers, for taxpayers with significant non-salary, non-wage income. Like if you have a significant rental, interest, dividends, any income that you don't really withhold taxes on during the year, and it is significant part of your pool of income, then you probably need to pay estimated taxes. And of course, if you're a self-employed individual, like if you have your Schedule C, or if you're a partner and you receive guaranteed payments, if you're any type of individual that you don't have a W-2, don't have withholding during the year, then you need to pay your first quarter estimated taxes by April 15. And April 15, it covers the income earned from January 1st to March 31st, so the first quarter. All right. What else can you do on the individual side? IRA and HSA contribution for the prior year. IRA, individual retirement account, and HSA for health saving account. If you are eligible to contribute to them, this is the deadline to make a prior year contribution, meaning that you can contribute for year 2024 in 2025. Like you can make the contribution by April 15, 2025, but you tell your financial advisor that this is a contribution for year 2024 to take the deduction on your 2024 tax return. So whether it's a traditional or Roth IRA, this is the deadline. Health saving account, solo 401k for sole props without employees if allowed by the plan. So just to note here that if you extend the deadline, if you extend your tax return, that doesn't mean an extension of these contributions. So you have to make the contribution by April 15 to take it in year 2024, even if you extend your return till October 15, you won't be allowed to make the contribution post April 15 if you want to take the deduction in 2024. All right. Okay. Now let's switch gears for businesses. You file your business tax return. Wait, didn't we file it in March 15 or 17 this year? That was S Corps and 1120S. But C Corp tax returns form 1120, you have to file it by April 15 if your corporation fiscal year ends on December 31st. And again, even if zero return, we said that before, even with zero return, you need to file it. And if you need an automatic 6-month extension, you need to file Form 7004 to extend the time to file. But again, you need to deposit what you estimate you owe by April 15. An extension to file is not an extension to pay. And do not forget to contribute to your business retirement account by the filing date. So if your C Corp has a SIP IRA account or a contribution, profit sharing contribution plan, or so on, you need to contribute to the retirement account by the filing date. So this is a little different from the individual IRA accounts. You have you can make contributions if you're extending the return. You can make the contribution post April 15. Same thing applies to the S Corps and LLCs. We talked about that on the March 17 presentation. So same thing applies. If you extend your return and you decide to file it by June, then you contribute to your retirement account ultimately by June. If you decide to do it by October, then ultimately by October. All right. So that's just a note here. Also regarding the business again, some S Corps and LLC state returns are due on April 15. So the federal was due on March 17. Some states are due on March 17 along with the federal, but some states have different requirements. So you kind of need to check on your state requirement to see what states do you need to file tax return in and what are their due dates. All right, and then something else for C corporations, the first installment of 2025 estimated taxes of a calendar year corporation is due. So this is the first installment of 2025. Most people pay it along with the filing for 2024 or the extension. All right, so away from individual, away from business comes now fiduciary returns. Fiduciary returns, this is the last day to also timely file a 2024 calendar year fiduciary return. This is Form 1041, but this is for states and trusts, or you can file an extension. So states and trusts follow the same deadline. Same thing with gift tax return form 709. Gift tax returns, this is if you gifted more than 18,000 per recipient in 2024, then you must file form 709 to report the gifts. But wait, am I gonna pay taxes on it? Nope. This is not a tax liability unless they exceed their lifetime exemption. So you have a lifetime exemption of 13.61 million in 2024. So if you're only gifting 18,000 or more, like 18,000 is fine, but more than 18,000, or if you gifted like a property, if you gifted something of value that exceed this amount, you need to report it. You don't pay taxes on it unless you get to the point that you already gifted about 13.61 million. So this is of course very valuable for people with high net worth and that gift to other people. So that's just something to note here. All right. I think there are some, of course, payroll related like tax deadlines and that I didn't want to bother you with it, but this is, I think, that's most relevant to you. All right, so if you need help with the coming deadline, please reach out and we can help you. All right. Thank you so much and take care.